And in our top business story, Emaar Malls has recorded a net profit of 1.65 billion dirhams for full year 2015, 23% higher than the 1.35 billion dirham net profit recorded the year earlier. According to figures released by the developer, rental income also grew 11% to reach just over 2.9 billion dirhams, up from 2.6 billion dirhams in 2014. Net profits during the fourth quarter were 435 million dirhams, 16% higher than Q3. Continuing the healthy trend, Emaar Malls occupancy levels increased to reach 96% in 2015, while base rent renewal rates clocked an increase of 25% for leases renewed during the year. Visitor arrivals across all Emaar Malls assets crossed 124 million in 2015, an increase of 9% compared to 2014. Dubai Mall accounted for 80 million annual visitors, once again clinching the honor as the world's most visited shopping and leisure destination. Commenting on the results, Mohammed Al Abbar, the chairman of Emaar Malls and Emaar Properties, said that as the retail sector is a key contributor to Dubai's GDP, Emaar Malls assets mark a significant contribution to defining Dubai as a must-visit destination for retail and leisure. He added that the robust performance of all the company's mall assets underline its commitment to sustained value creation for its stakeholders. Dubai's DP World revealed today that its 2015 annual gross container volumes rose 2.4% across its global portfolio of container terminals on a like-for-like basis and increased 3% on a reported basis. According to a company statement, gross volumes totaled 61.7 million 20-foot equivalent units in 2015, up from 59.9 million TEU in 2014. Annual consolidated volumes at terminals over which DP World has control were 29.1 million TEU, up 1.7% on a like-for-like basis and 2.7% higher on a reported basis. Growth in 2015 was largely driven by European and UAE terminals. The portfolio benefited from the ramp-up in London Gateway, and the UAE handled a record 15.6 million TEUs, representing like-for-like growth of 2.3% of the year. Meanwhile, utilization at Jebel Ali remained high at approximately 90%, despite the softer volumes in the fourth quarter of 2015. DP World Group Chairman and Chief Executive Officer Sultan Ahmed bin Sulayem said the second half of 2015 was difficult for global trade operators as various economic headwinds, including currency weakness and lower commodity prices, adversely impacted trade growth. However, he went on to state that against this challenging backdrop, all our three regions continued to deliver full-year volume growth on a like-for-like basis, which demonstrates the strength of our portfolio. Bin Sulayem added that DP World remains confident about the medium to long-term outlook of the industry and will continue to invest to meet the future capacity requirements of their customers. Air Arabia announced strong full-year financial results for 2015 as the Middle East and North Africa's first and largest low-cost carrier continued to deliver healthy growth and strong levels of profitability. Air Arabia's net profit for the full year ending December 31, 2015 was 531 million dirhams, 6% lower than 2014 figure of 566 million dirhams. Turnover in 2015 reached 3.8 billion dirhams, an increase of 3% on the preceding 12 months as the airline continued to expand its customer base. More than 7.6 million passengers flew with Air Arabia in 2015, a 12% year-on-year increase. The average seat load factor, or passengers carried as a percentage of available seats in 2015, stood at an impressive 79%. Following its strong 2015 performance, Air Arabia's board of directors proposed a dividend distribution of 9% of share capital, which is equivalent to 9 fils per share. The proposal was made following a meeting of the board of directors of Air Arabia and is subject to ratification by Air Arabia's shareholders at the company's upcoming annual general meeting on the 25th of February 2016. Air Arabia added 23 routes to its network in 2015, including the significant achievement of becoming the first low-cost airline from the Middle East and Africa to enter the Chinese market with the launch of regular non-stop services to Urumqi, the largest city in western China. And gold is once again gaining traction among fund managers. After 3 years of losses, the yellow metal has gained more than 8% so far in the year, becoming the best performing asset class globally due to safe haven buying triggered by a series of bad news from China and tumbling oil prices. According to a local report on Thursday, spot gold hit $1,155.30 an ounce, its highest since October 29, and analysts feel the best is yet to come. The chief market analyst with AVA Trade was quoted in a local paper stating that 2016 is the year for gold and it could be the best performing commodity. It was added that gold price could easily close near the $1,350 mark by the end of the year, and the global volatility will keep the investor appetite elevated. However, it was stated that investors should also take caution. Gold typically rises when the dollar slides and falls when the dollar rises. The link is with interest rates, which when they rise also push up the opportunity cost of holding the metal, which earns no yield and costs money to store and insure.